Okay. Hey everybody, welcome back to the Russell Journal. I am Russell and this is my journal entry for today, October 13th. It is Thursday, October 13th, 2022. I would just like to take a moment and say, I told you so. I told you. I told you. Look at this. Look at all that green. Ha! Right? You got some red coming in, they close, close, close. You got some stuff pulling back. Not a big deal. What's going on? Wake up this morning and it is blood red on the screen all the way down. SPY is at 348. What happened? We got the CPI report. CPI came in hot. So if we were so red coming into the morning, how come we're up? Is it just, oh, the bulls want to squeeze the shorts, or, oh, the Fed's going to pivot, or, oh, right? Here's the deal. The media out there the media and everybody out there is really, really lying to you. They have set this up because they don't get it. They don't understand it. They haven't figured it out. Right? They haven't put all of this together as to what's actually going on. And the reason they haven't figured it out is because they're not thinking for all of the different players in the game. Okay? You watch CNBC and Jim Cramer and all of these guys, and they only think like investors. And when they talk to you, they only talk like investors. And they only speak like investors, okay? And they only speak like retail investors. None of them are talking to you as like the whole size of the market, okay? And this is where part of the reason why I'm doing this channel is so that somebody out there is encompassing the whole thing. We're looking at the whole picture, okay? All right. You have two sides of this market. The bear case, okay? And this is the first one because it is now the most prevalent case, okay? The bear case is that the Fed will tighten too quickly, okay? That is the first thing that they are going to think. As a result of tightening, bond rates are going to go too high, okay? Especially with an inverted curve. This is going to lead us to a recession. And a recession always somehow means that there is a stock market crash, okay? Asset prices lose 80, 90% of the thing. That has happened before, but it does not happen every time. Not every time, right? But we should be prepared for it. They legitimately think that is what it is. Now, there's two other things about this. In the bear camp, okay, there is a thing within the hedge funds and investors and guys who take bigger, longer swing trades, okay? And what they do is what I call it short and shout, okay? They go out there and they take a short position and then they relentlessly bang the media to tell you that there's going to be a 90% crash in the market. Okay, same thing on the long side, right? What do they say? Get long and get loud. That's the other side. Everybody run to buy Tesla. Tesla's going to save us from the dark fossil fuels, right? And to be honest with you, like nothing. Like you're in the middle, right? And they're going to catch you if they, and you might be making money for a couple of years. Right? And then they go the other side and now you're losing money. Now you're in the red, right? And you thought everything was good. We ran out and bought SPACs, right? All of those things. Okay. The economic system, all of those things are what happened, the noise, the circus around it. But at the end of the day, the economic system is the economic system. And it has core functioning pieces of machinery that work inside of it. And at any given time, they exact any certain level for all of this. Okay? Prices, trends, all of it is relevant to that machine. All right? So what is happening? Okay. You have a bunch of really big money that is invested in all of this. Whatever dollar you see up here on this screen, there is big bunches of people who own that asset, and they will defend that asset. Okay. And they are also looking to own more of that asset. Okay. That is one group of players within this market. Okay. So you have two sides of this. You've got the bear side that says, hey, this whole thing is going to collapse. The whole thing is going to crash. It's all going to zero. It's going to be an apocalypse. Okay. On the bull side, you have this, well, it's not going to crash, or it's not going to zero, or if it does go to zero, I'm going to buy more, right? Like, those are sort of what you have when it comes to this. You've got these two sort of things, because guess what? Everybody wants to make money, right? If you can't believe that there's any reason for it to continue to go up, you must believe it's going to go down. And if you believe it's going to go, if you don't believe it's going to go down, it must go to the moon. Everything goes to the moon, right? And so what happened this morning? Why then, if the bears are right, if the system is falling apart, right? How do you go on SPY from the low of 348 all the way up to that number? And that's not even as high as it got today, right? It was almost to 3. It was almost a $20 move in the index today. How did that happen? Okay, so we're going to explain this. Right now, if you're watching, you feel as though the Fed is failing. They have done a massive amounts of interest rate hikes, and all we're seeing is inflation continue to rise. Okay. The thing about it, okay, into the core of this, the thing about it is that is what must happen. The Fed raising interest rates must make more inflation. Okay. We are fighting fire with fire here. Okay. That inflation is it has to go up, and it just keeps going up. They keep raising until what? Until you stop spending money. Okay. That is what happens. Okay. They are trying to make prices so high, you stop buying. That's what they want. Okay. At the point that you stop buying, there's still people out there with stuff to sell. Okay. Those people are going to need to sell that stuff. And whether they make money on it or lose money on it, they got to get some of that money back. And so what they will do is lower the price. And they will lower prices until you finally think it's cheap enough or have enough money to buy that. Okay. So when we wake up and we see CPI data way up here, it's not telling us that what the Fed's doing isn't working. It is telling us that what the Fed is doing is working. It is raising those prices. It is. When you see mortgage rates going up, you know that the Fed's job is being done, right? Now, you may choose to not trust the Fed. You may choose to not trust whether or not that is best for the economy in the long run. You may choose to not believe that. And by all means, you can be a bear. And there's lots of money to be made as a bear. But on the other side of that, no, there are huge money accounts, huge money funds that have to believe that the Fed is going to fix this. And when they see something like that, that shows that the Fed's job is getting done, it's being done, right? They will buy the market, because guess what they know? They don't know that a Fed pivot is coming. Okay. Everybody forget about the pivot. Nobody thinks about the pivot. Nobody cares about the pivot, right? What they care about is that the Fed will get the job done and that the economy will remain intact. Okay. If the economy remains intact, that means a 5-year time horizon for investing, a 10-year time horizon, a 20, 25, right? Whatever you're investing for investing, whatever your horizon is, as long as you can believe that the economy will be intact, you will, should, and must buy. Okay. So the thing is like when you wake up and you look here and you go, well, why is it going up? It's so stupid. It doesn't make any sense. Those guys with lots, I mean, hundreds of billions, if not trillions of dollars, have no choice. They will have to buy this market at some point, not to save it from crashing, but because their portfolio is required to be balanced based on certain averages. And when those averages get to a certain place, they have to buy. And if you couple that with, hey, we can see what the Fed is doing is working, and we're at the average where we're supposed to buy, you get today. Okay. Now, where then is the bear thesis inside of all of this? And it's the same place as the bull thesis. Okay. The two things that we need to see to know the Fed's job is getting done is prices continuing to go up. As long as those prices continue to go up, okay, we know the Fed's job is 1/3 done, okay? The second thing that we are going to look at, and this is where we're going to look tomorrow, and we're going to look through the earnings coming up in the next week, in the next going forward. And we will be looking at those earnings, and we will be looking at what the guidance is on those earnings, right? And what we want to see that the Fed's job is getting done is we want to see that those retail sales are going down and they're projected to go down. And if this is the case, we can know that inflation is probably going to come down. Okay, that inflation is getting handled, it's getting managed. If inflation is getting managed, guess what? Oh, the economy will remain intact. Now, how does that look on my 5-year, 10-year, 20-year, whatever my time horizon is? What is that? Oh, it looks good. Things are bad. I should be buying, right? How many people wish they could have gone back to 2009, found the bottom of the housing market and just bought one stinking house? I could have bought a house in Las Vegas, Nevada. I could have bought a townhome for $15,000 cash, right? Even now, with a high inflation, that place is worth 160 grand. I would have 10x'd it. Okay. So the thing is like, how many people wish they had that chance? Look at the chart. There's your chance. It's right there. And they're going to take it. What the thing is like, again, how then do we figure out the bear case? Tomorrow, if you come in and those and the retail sales are still up, they're still super elevated, the bulls will cut their positions and they will move out. Okay. And I will go look. I'm going to pull it up for you right here. And we'll wrap this. Oh, and I've got a lot of stuff to show you tonight. So this is going to be a good show. That is not what I meant to do. I didn't mean to pull all of that up. All right. Okay. So tomorrow, you're expecting retail sales of 0.3. There were 0.3 retail sales. Right. Okay. So going to Market Watch. This is hands down the most important thing, because this will show us whether or not the Fed's job is getting done and whether this is the peak of CPI. Okay. Now, again, they bought this up hoping and this up. And I'm going to show you some other stuff on the chart that shows you this proves what I said yesterday when I said CPI is not the most important report you're going to get this week. Okay. And I'll give you an argument for that in a minute. But okay. So here you are. You've got your retail sales up. Okay. All right. So all of this is this. It's the stock market, or it's the reports. Okay. These are all coming out. One other thing I want to point out really quick too in this is the unemployment rate is still, you only had 228,000 new claims, and you still only got 1.37 million continuing claims. Okay. Unemployment, this is a lot of stuff for the bull scenario. Okay. The bull scenario needs to see unemployment. It needs to see unemployment still remain relatively low. Okay. It can go up a bit, but the lower, as a matter of fact, the bull case wants to see that slowly start to elevate. Okay. That will tell them that the Fed their job is getting done. They want to see jobs disappearing from the economy. That will tell them that the Fed is getting the job done. They want to see retail sales coming down. That will tell them that the job is getting done. Okay. That is what they want to see. If that job gets done, it means good economy for another 10 years. If it doesn't get done, it's pandemonium in the streets. Okay. People who say that the bull scenario, the pivot scenario was apocalypse. That is a bad thing. A Fed pivot is a terrible idea. Why that was even on the thing, I do not know. But what I will tell you now is that if we see if we see a tick back anywhere in those retail sales, it will tell you the Fed's job is being done. Okay. Now, it does not tell you whether or not something is going to break. It doesn't tell you whether the housing market or the bond market or any of those other markets are going to break. But if we see ticks back in those, the Fed can slow down. It can calm down on inflation or on rate raises. Okay. If we're finally starting to see some reaction in these, then the Fed can actually simmer. Okay. But as of right now, we don't have that. Okay. So we're going to go to the charts now, and we're going to talk about the charts, and I'm going to show you what I have done. This is a very interesting thing that I've put on here. Go back over here. I'll close the options chain for you all. Okay. So one of the first things I want you to see here is on the daily. Okay. I'm going to wheel in, and I want you to see this. And this is something that I want you to know is before every major report, you can see something happens. Okay. This was basically last week, right? When they were waiting for the non-farm payrolls. Okay. This is right before, this is the day before we go up, we tag the 18, right? This pretty much happens before every actual major report. Now, the thing you will notice is today was CPI day, and we didn't go there yesterday. What does that tell you? It tells you that the market doesn't consider today's report to be that important, okay? This is why I said yesterday, nobody cares about CPI, right? We expect it. We already know it's going up. We saw the non-farm payrolls back here. Right? This day is the day we saw non-farm payrolls. So the thing is you sold off. You know why? Because those non-farm payrolls meant the CPI was going to be higher. Oh, we already knew. Thank you. Right? So it's very stupid for everybody who ran it. Like, unless you covered short right here this morning, you really got hosed on this. And this is why, like, I didn't hold a position into this report because I didn't know. And I'll tell you, the other thing is, like, the way they were all trappy yesterday. See how, like, little movement this thing had right here. Here, I'll point. See how little movement, how tiny that candle is ahead of this report, right? That tells you sums up, right? Now, check this out. You want to see something cool? See how this candle is outside of this candle? Well, that's an outside day. So unless you come back here and take out this low, you're going in that direction overall. Okay. And that's a big outside day, but we'll get into this more specific day, right? That's what I want to see. All right. The next thing I want you to see if I can grab that and move it over. Nope. Don't want to do that. All right. I'm trying to show you this position that I'm holding right now. And I want you to see it because it's called the strangle and it's very important to me. I'm going to see if I can get it. There we go. Okay. So there you can see the position. All right, great. I'm happy about this. Okay, so this is called a strangle. And what you do here is you're going to go long and short at the same time. You're going to buy a put and a call. Okay. I don't know how tomorrow's thing's going to happen, right? I know that right now that is right there is basically what the bulls are hoping for is tomorrow, those reports. God, please. I did not mean to do this. Jesus. There we go. Now we're back in the picture. All right. All right. Okay. So here we go. We're back in normal. Okay. Maybe my beautiful girlfriend, a producer, can edit that all out. Okay. So we're long and short at the same time. Okay. That's basically it. Now, what could potentially happen tomorrow in this with tomorrow's data, if it goes against you, right? You can see this whole thing becomes basically a trap where we retrace 100% of this big ass candle here, which is basically a 20-point move. Okay. You don't know whether or not that can happen or not. At the same time, what we do also know is you're sitting there at the 18-day moving average, which puts you essentially in the neutral zone. Okay. Where you are in the neutral zone gives you this 388 potential price target right here. Okay. Now, each of these contracts cost me about $20. And I actually kind of screwed this one up. I bought the call when I meant to buy the put. And so that some software errors there on my part. But you can see right here it doesn't really matter. Like essentially whatever I stand to lose on one side of this, if this thing blows through and continues right on up to that upper Bollinger Band, right? That's another $20 move for me, right? So options premium wise, that puts about $1,000 in my pocket if I hold through that whole thing. On the other side of that, the move back down is now to 348. So that also is a $20 move. That also puts intrinsically about $1,000 into my pocket. Okay. At this point, all I'm risking is these premiums right here. These two numbers, this is how much I paid for each of these contracts. So I'm going to lose one of these, right? The other side, though, is going to move one way or the other. Okay, that is based on the retail sales numbers we get. You're going to get a move one way or the other. I don't know which way it's going to move based on those numbers because I don't know. I have no idea what those retail sales numbers are going to be. Now, I'm hoping they're low and the call side goes because I would just love to see this market create some more room. I, in the long run, and if you've watched any of my channel, am overly bearish on the market. But again, I understand I understand the importance of this spot and this time and these reports right now. Okay. So I understand why the market is do what it do. Okay. So, all right. That being said, if you're showing up just for the chit chat part of this, it's over. We're going to jump into the technical side of things now. So feel free to, you can take a hike if you want, or you can hang out and keep watching. But that is what they're not telling you is basically what they're not telling you is basically why that happened, why it really happened, what the real case is. You're going to hear a lot of stuff about the pivot and this, that, and the other thing. And it's just not true. None of it's true. Nobody cares about your pivot. All right. So let's go ahead and jump back on over to the VIX. Now, one of the things that I think is very interesting here is the SPY closed up what, like, 3%, and the VIX is down 4%. So this here is not a very big move in the VIX, and it's overall not very super bullish. And you can see that you're coming into the 18-day moving average. But what you have in play here is called the double top. So we want to talk about that. But we will still go and do our normal thing. Okay. So if you've been with me, you know the drill. Trend. Higher highs, higher lows, right? Still working on another higher high, right? Bias above the 18-day moving average. We have a long bias for the VIX, right? Henceforth, part of the reason why I got that put. All right. Momentum is up, but you have rejected overbought and you're starting to turn down. A break below the 18-day moving average. Targeting right now will probably be this 18-day moving average right here. And if you break below that, you're looking for the lower Bollinger Band. The VIX is really kind of over in the VIX. It can catch a bounce, and maybe it will with those numbers tomorrow. But I'm pretty sure we're going back up for a ways. Like right now, I don't know. I wouldn't put any money on it. I did put money on it, actually. Stupid. Okay. DXY. Okay. Now this is behaving like the Fed going to pivot. Okay. And there's something about the bond market and the bond market and the currencies that kind of want to believe that that's going to happen. That the Fed is going to pivot around this stuff. Again, I don't think the Fed's going to pivot, but the signs here say that it doesn't say that it wants to. It says that the Fed's going to have to. Okay. The pivot is not a bull case scenario for me, nor should it be for you or anybody else. A Fed pivot is not good. Okay. So where are you here? Okay. You're at the 18-day moving average. You do have, okay, back to the thing. What do we got? You got no trend. You got lower high, or you got lower low. No, higher low, lower high, right? At the very best, you've got lower low, higher high, or higher, or lower low. What is that? Lower high, higher low, right? You really have no trend. The dollar doesn't know what's going on. That's what it tells you. It tells you we don't know. We're going to hang out here in neutral for a while. And that's what you have. If you look at your momentum's flattening out. You are not heading back up to be oversold. Your momentum's kind of, you can even look at your MACD and see momentum, right? You've got no momentum between momentum and price here on the MACD, which don't usually recommend people use the MACD, okay? I used to, but I don't anymore. Okay, going back to SPY. All right, for SPY, you've still got a downtrend, okay? You've got a lower low, and this is still a lower high, okay? Break above that 18-day moving average, and you've got a different thing, okay? Bias is now neutral, basically. Henceforth, the strangle, okay? I'm on either side of this line. That is my goal. That is my dream. Now, part of it is because I'm projecting what this line is going to be tomorrow, not because of what it is today. So you've got the strangle. You've got momentum is coming up. You just lost the embedded reading. Break over that line. Longs, bulls take over. Stay underneath it. Bear case scenario going down. And big report tomorrow. So that's really it. One of the things that you have to remember too is big outside day usually indicates some sort of indication or some sort of like change in trend. Okay. So we've been going down, pretty good chance you're going back up. One of the things too, if you go back to one of my other videos where I talk about the kiss of death, One of the things that happens after you take out the previous low, which was the June low at 360, which we obviously have done at this point, there is a 9% on average retracement. So this could still be a collapse, a crash actually coming. I don't know what asset is going to cause that, but I do know that it is possible. Right here would be 390 would be roughly 9% on this before you get the actual market crash. So if the kiss of death plays out, 390, start looking out like I bet right here, I'm going to be looking real cautious as far as like what to do. Be looking to either buy some inverse ETS if SPY gets to 390 or something like that. So that is pretty much what we're thinking. So that is it for me today, you guys. I'd like to thank you for checking out the show. Do me a favor. If you can on your way out, please get long on the like button. Nice risk to reward ratio. Doesn't cost anything. Helps me out in the channel quite a bit. So what's our ending spiel? How does it go? The Russell Journal is written, edited, and hosted by me, Russell Liss. We are produced with social media shows. Our executive producer is Maria Pereza. Give social media shows a try. Go like them, all the things on that. And until tomorrow, you guys go ahead and just pretend I said some sort of catchphrase.